Hi, this is Bert Dohmen with a chart predictor. Today is May 6th. Uh, we hope that you had a wonderful Cinco de Mayo day and you enjoyed our chart video of yesterday, which was the ETF for long-term Treasury bonds, TLT, which was very timely because today the TLT, at least in the early hour, had a very strong rally based on the disappointing jobs report. And we should see much more of that in our opinion. But today let's look at another very important indicator for the general stock market, and that is Apple. Here you can see this chart of Apple. The high last year was around here, and then we combine this high with these points here, and we get a trend line. And this is very important. As you know, if you followed our videos, we turned bearish on Apple over a year ago. It said Apple has no innovation under the current CEO. The only innovation is size. Make something smaller, make it bigger, but no technological advances to speak of, while the competition is just running away with that. Anyway, it's a company that has a lot of cash, over $200 billion of cash, but doesn't know what to do with it. So a lot of bulls buy the stock or recommend buying the stock because of all the cash. And our point is, if you like a company with a lot of cash, buy a bank. And so we don't buy stocks for cash, because you're basically exchanging your money for their money, and you cannot get at their money. So I'd rather be able to keep my money. Also, the stock has been supported quite a bit by stock buybacks that the company has done. I think it's over $130 billion so far. This is financial engineering. It does absolutely nothing for the company. So let's take a look at this, where we are now. Here's the August 24th plunge low. This was an intraday plunge where the Dow Jones Industrials was down 1,089 points in the first 30 minutes of trading. Many people have forgotten that already, but it was horrendous. Then the support action started, and the market actually closed up here for the day, so it wasn't so bad by the close. But that is an important point. This was a panic dumping of the stock. Here we see how that level once again was support for the stock in February, during this January-February decline in the market, and once again it served to produce a nice rally. Now we have the third time down to that level. My rule is that the third time down you break through, and this line goes through at about 92.30, and so at this writing we're almost there. Once that breaks, I believe that the entire stock market is going to break, because this is such an important factor. It's the largest cap company in the world, and when the support for that stock is given up by Wall Street, it means that support operations are being overwhelmed by market forces. That's all for today. Be sure to get the Wellington letter, because this is the kind of stuff that we talk about in the Wellington letter several times per month, and it's probably the best investment that you can make if you believe that your wealth is worth keeping up with the market. If you think you can get the best advice in the financial media, good luck to you, because we think it's just an avenue for highly conflicted Wall Street guys to talk their book. This is Bert Dohmen. Thank you very much for joining us today.